Today is Thursday, May 28th, 2026, and you already know on a day like today, I was pumped up, ready to go, ready to record a video before it goes back down, and I'm break even on the day as we usually have been for most of this year. The most of this year we've just been hovering around, not doing anything. So you already know I got to hurry up and record before the 6% plus up goes all the way back down to just a point, whatever. But anyways, my account is back up to 170. I am up over 6% on the day. For the week, that puts me up above 8%, 8.78%. For the month, I am slightly down, just 0.91%. For the past 3 months, I am up above 4%. Year to date, still down 27%. And year over year, I am up slightly more than 20%. And of all time is 400% now. Take a look at some top movers. We got AXON, huge day for AXON, 12.72, so 12.72%. Palantir is 5.8%. Robinhood's above 5%. Speaking of Robinhood, they just announced that Trump Accounts has their own app now. So I think it's any American baby born between 2025 and 2028, something like that. Y'all can look it up or just ask Gemini or Grok, whatever, for the exact details for Trump Accounts. But they did announce the app now, so I guess it's available for parents that actually have an account. I don't exactly know how this benefits Robinhood and BNY Mellon because they partnered together to create this app for the government, of course. And Vlad did mention that it's not something that's going to be super profitable. It's more of like, this is more of like a government service, right? They're just doing this because obviously they want the name exposure, right? As the government is promoting Trump Accounts, they have their name included in that. So, it's going to be Trump Accounts brought to you by like Robinhood and BNY Mellon, right? So it's not really for profit purposes. It's more for just government service, having closer ties with regulators and the government, but also doing like a public good. But I do think it is cool that Robinhood is giving a little bit of that user experience over to the government, because the government is notorious for having terrible user interface and user experience on their websites. And Robinhood is the complete opposite. In my opinion, Robinhood still has the best user interface, even though they continue to put more on our screen, right? Like before, I don't know how many of you guys are Robinhood OGs, but we used to not have these multi accounts up at the top. We used to not have these top movers. It literally just used to be our chart and then the news for the day, right, that we could scroll through. And briefly, we actually did have a compare feature where we could actually like overlay QQQ or SPY over our accounts, and we could compare our performances, but they took that away for some reason. I really hope it comes back. But anyways, my second account, you'll notice it is a little bit higher, and that's because I actually made some big moves here recently. I sold basically or almost all of my Sprouts Farmers Market. Lucky for me, it is actually down today, so I guess I cashed out at the right time, even though I still think there's a possibility for it to go to 100. But as I said, I kept my 5 shares that I had, just my small souvenirs, my 5 free shares of Sprouts, and I dumped it into my second account. So that's why it's a little bit juiced up, and you'll notice that it's almost at $6,000 now. So originally it was just a $5,000 deposit into the second account as like a little bit of seed money, but with all the asset transfers, it bumps it up to 5.5. So now obviously I'm going to start withdrawing a little bit more money out of this one to put it back into my main account, because like I said, that was just some seed money to get it going, and then I'm going to start withdrawing little by little, slowly over time. But we have my Roth IRA that is also having a great day today. For the day, it is up 4.3%, finally back above $2,000. Took forever. For the past week, it is up 5.9%. Past month is over 3.5%. 3 months is basically break even, just slightly green. Year to date is actually down still 2.5%. Not as bad as my main account, but still down. For the past year, it is up 30%. And as you can see, it's building this very nice wedge pattern. All-time highs is around 2.5K. So we will be getting there, I think, sooner rather than later. A very nice consolidation here, nice wedge building. So I think we'll see this account at 3K within this year. It is actually possible, in my opinion. And as we take a look at some of my option positions in crypto's having an okay day today. Options are doing okay as well. IGV, it says it's down $20, but I actually wouldn't mind getting rid of that at the 100 strike, which is obviously why I sold the covered call at 100. Obviously, software could rip all the way back up to all-time highs, but I have 110 shares, so if 100 shares get called away, I still have 10 shares. I'll just dump it in my secondary account as usual. So it is what it is. Another stock that's having a great day today, Shopify. My cash secured put seems to be doing good, and I didn't know this, or I didn't realize that I might have done a loss wash. So when I rolled this cash secured put originally, I did take a loss, paper loss, that could have been used to help lower my taxes, but I guess me buying the dip on Shopify possibly could have washed away some of those losses. So it's unfortunate, but oh well. It was like a $900 loss. It is what it is. I'm sure I'll be able to find another $900 loss within this year. But software up 2.5%, having a ripper rally. Now, like I've said for a while now, I think software IGV has the potential to hit $100 a share within this year, which would basically just bring it back up to where it was in January, right? So I'm not really saying anything too crazy. I'm just saying it's possible to get back to where we were in January. And then, of course, my covered call would get assigned away. Unless we just hover at 95, chillax for the remaining, the next 30 days. I wouldn't mind that. I get to collect all of my premium. And then I get to keep all of my shares still, so I wouldn't mind that at all. ILF not really doing much, but AXON having a crazy day today. I'm not really sure why, but 12.5% in one day is insane. That brings me up about 6.88% of all time. So I am in the green on my position. I still think AXON has the potential to hit $600 a share this year. So that is good to see. CAV is actually down today, back under 80 again. I might reload another trade into Kava. There's just so many stocks that I want to buy, so many to choose from. But anyways, the NASDAQ obviously up 0.75%. And we get to Robinhood finally, up 5.25%. Nike up almost 3% today. Palantir up over 5% as well. Still, it looks like it's trading alongside Robinhood still. American Express basically break even. Shopify's up 3.7%. SoFi above 4% today. Lemonade up 2.8%. Here are my recent transactions, and as I stated before, I did go ahead and just cash out of my Sprouts, even though I did say that there's a potential for it to still hit 100, so that would have brought it to 10 grand instead of just cashing out at 8.8. But at the end of the day, I get to keep 5 shares. I made a lot of money on it. I mean, just on this lot alone, I made over $1,200 just on this one lot. So, I made a lot of money. Not as much, obviously, as I could have if I just held it to 100. But at the end of the day, I get to free up some capital. I also got to keep 5 shares, right, that I ended up transferring, as you guys can see, into my secondary account. And I also bought the dip on Shopify. Almost at Spotify there. But I also did cash out of Reddit, and I took my 0.11 fractional share. I just put it into my secondary account, and that actually reminds me, in my secondary account, I'm actually very close to getting to 1 complete share of Reddit. So, all these little puzzle pieces I've been collecting off Reddit, it's finally starting to pay off. I'm going to have my 1 free share of Reddit that I get to boast about. But I did buy 70 shares of Shopify because I just wanted to go ahead and get it over with. I've been saying for a long time now that I wanted Shopify to be up there, in terms of my top positions. Looking at my top positions here, I guess you could say when REPX was above $40, I should have cashed out and just kept my free shares on the side to just keep collecting dividends forever, and then taking that 20 grand or whatever it would be, like 18 grand or whatnot, and split it up into American Express, Shopify, SoFi, Lemonade, because those are the stocks that I wanted to boost up, right? But it is what it is. I still have my Nike, Pepsi, and RPX in my top 5, which is kind of dragging down my performance, I know, but it is what it is. I still like what I see on the long-term charts on REPX, and at the end of the day, they're still making a boatload of money on these high gas prices, right? Now, I also wanted to share this interesting post on X. This is from the CFP of Robinhood, Pat Dunn. He just talks about how human to human is still important. Of course, you guys can just read it for yourself. There's still a lot of value in human to human, conversations and contact, of course, which is obvious. And somebody responded saying that Robinhood should make a platform for RIAs. And I'm guessing he means Robinhood should make a platform for financial advisors so that they can use the Robinhood platform while also helping people, right, managing their accounts, which I do think would be an interesting idea, right? Because imagine having, a lot of these Robinhood users that like to gamble on options and event contracts, instead of losing so much money on that. Imagine if they actually had a human that they could, right, maybe pay like a small fee, maybe $5 a month, or maybe just include it in Robinhood Gold, right? And they actually have a human that overlooks their account and notices that they're wasting a lot of money on event contracts and tells them, hey, you should really at least try to max out your IRA, try to invest a little bit more consistently, right? Just stick to basic ETFs and index funds like QQQ, right? SPY, or whatever the Vanguard one is. So it's not a terrible idea by Mr. Austin here, but I also just wanted to respond here, and I said that it would be cool if that's actually what Robinhood Social becomes, right? Where users can actually allow others to view their live equity allocations and their live positions for a small fee. So, imagine kind of like how X is doing right now, where you can pay $1 a month as a subscription to another user. You can actually just do that 100% on the Robinhood platform. So there's literally no middlemen other than Robinhood, obviously, right? But let's say Robinhood Social, you pull it up, you can follow my account, but you can also pay $1 a month or whatever the price is that I want to set it at. And that $1 directly goes to me, right? Or maybe Robinhood takes 1 penny, right? And I just end up with 99 cents, whatever, right? But it's because, Robinhood is innovating so much, and they're, at the end of the day, they're a fintech company, right? They'll just handle that transaction 100% without any middlemen like Stripe or, Apple Pay. Or there's no PayPal that's going to collect some ridiculous 5% fee, right? Or Apple collecting a crazy 30% fee. It's just Robinhood handling that transaction, and you get to pay like $1 a month and see my actual real trades, right? No edits, no Photoshop. It's just live equity positions, and you get to see exactly where I'm putting my money, if I'm putting my money where my mouth is, right? And it would also be interesting for insiders. Obviously, this would need like regulatory approval, but hopefully Trump, his close ties with crypto and fintech, they'll be able to get it done. But it'd be cool if insiders can actually join Robinhood Social and just say, hey, you guys want to complain so much about insider trading, you can just see what all of my positions are, right, in real time, live. But I still want that, that small $5 a month or whatever it is that they want, right? And so it'll actually incentivize insiders to be more transparent, which I think is an interesting future that we're heading to. I think there's bright days ahead for fintech and finance. We're kind of entering this era of transparency, right? With the help of blockchain, crypto, social media, and Robinhood, right? Fintech. So I think it would be an interesting idea. And I think the CFP of Robinhood also thinks it's an interesting idea. So if Robinhood is serious about Robinhood Social being a community, right, as Mr. Pat Dunn is talking about here, it seems like he values human connection, trust, community. All right, and a big part of that is obviously going to be transparency. I have very high hopes for Robinhood Social, and I actually think it has the potential to take a lot of market share from X, right? Because a big community on X is the financial community. And if a lot of that goes over to Robinhood because they're just so much more efficient, like I said, on the back end, there's not a whole lot of middlemen collecting fees, right? Imagine all the big accounts transferring over to Robinhood because they're not taking so much in fees from their subscribers. That's a lot of market share. So I am very excited to see the future of Robinhood and fintech. But I asked for comments on my previous videos. It seems like all my recent comments are just from one person, and it seems like you're a new subscriber because you ask, I used to have 300K in my other videos, and you're wondering how I lost half. But if you're a long-term subscriber, you will know that like half of my account is in Robinhood stock, and Robinhood stock is down 50% from all-time highs. So, if you're asking how is my account down 50%, well, I mean, my biggest position is down 50%, right? So kind of makes sense. You also said here yesterday Robinhood sent you news stating that there's billions in short interest in software stocks like never before, and also chip stocks getting shorted. I'm not really sure about chip stocks, but yeah, I do think software, there's a lot of selling, there's a lot of people shorting, and we could possibly see a nice bounce back to where we were in January, right, on IGV. So it's interesting that you saw that there was high short interest, but you also said just buy VGT. I think that's the Vanguard Tech ETF. Yields you about 20% every year, and it's a lot safer than buying individual stocks, I guess. And I have been looking more into ETFs, right? Not as much as I should. I have very small amounts in ETFs. But when it comes to VGT specifically, I don't really know about 20% or where you're getting that from. But this whole idea about quote unquote safe, I think it's very important to specify what exactly that means. Because if what you mean by safe is there's less volatility, sure, but there's also higher opportunity costs, right? If you are able to somehow pick that one winner, right, like Palantir with like AI software, right? Palantir is a huge winner with AI software. Or if you were lucky enough to buy Robinhood back when it was below $10 a share, Robinhood is obviously probably the biggest winner in fintech. Then you definitely outperformed and you would have missed out a lot of upside if you would have just went ahead and bought a basket of fintechs, right? Like a little bit of Robinhood, a little bit of SoFi, a little bit of PayPal, a little bit of Melly, a little bit of Nubank, whatever, right? Sure, right, in a basket of that, you probably did okay, but just focusing on Robinhood, you made a lot of money. All right, and now more recently, obviously, it's down 50%, whatever. But just know that, yeah, ETFs are quote unquote safer, as in there's less volatility because it's a basket of a lot of stocks, but at the same time, there's higher opportunity cost.